Good morning once again, and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. On with Kyle Thomas this week as well, certified financial planner on the Haven investment team, talking about understanding investment strategies and all these wonderful retirement puzzle pieces and how fun and exciting all of them are or can be, or maybe not so much as you're listening and the new year's starting and you're wondering, am I in a good retirement position or am I not? What should I be doing differently? What don't I know? And the old saying, what I don't know, what you don't know can't hurt you. It maybe not physically hurt you, but it may hurt your pocketbook or your retirement strategy. And that's truly what we want to avoid.
Sure. Kyle Thomas is with us. He is a certified financial planner at Haven Financial Group. Kyle, let's talk a little bit about investment strategies and how they really need to be tailored for each individual.
Yeah, each investment strategy should be personalized for each person. I mean, there could be two identical people, the same amount of money and same goals that they have for spending and all that. And their risk profiles could be complete opposites. One could be 100% stocks, one could be 0% stocks. And people often ask us, well, what's the right answer for me? And it really depends on what your goals are. And that's why it's important to have the planning done so you can see what your goals are, and it can help us come up with a suggestion for you. And because we have people all over the map for their risk profile and, their demographics. So the asset allocation just needs to be what works for you. And typically, people say, subtract your age by 100 or 110. And that's a good way to go if you're not working with someone, just a general rule of thumb. But if you're working with someone, that's probably not going to be the case. Especially with us, we're going to figure out what your needs are and how are we going to get you there? What kind of appetite do you have for your risk? And we'll manage that accordingly. And that risk profile could change over time. Maybe it doesn't, but we'll usually find a risk profile that works well for you and something that we can stay in for a long time, because what we want is to maintain that risk profile and be able to work within those parameters. And that's where we can find the best risk reward characteristics for you for the future.
And, Kyle, people have to remember that maybe what was their profile when they were 45 is not necessarily their same profile at 65.
No, absolutely not. When you're at 45 years old, your outlook should be a whole lot different than it is when you're 75 years old. And that's where those target dates, can provide some value there, is because they do automatically adjust for you. But this is all something that we help people with, actually, on a weekly basis. We help them with their 401k allocations, even though it's not something that we're managing right now, until retirement, but we'll help them with that. And we can set in there, the stock to bond ratio that we're looking for and what's appropriate for them. But yeah, when you're younger, in your 20s and 30s and 40s, you should definitely be taking on some risk there, and risk meaning more stocks. And then we adjust that downwards, and maybe we don't adjust it downwards when you get to retirement. Again, it all just depends on what you're looking for. And because there's a lot of retirees that we meet with they're very comfortable with the stocks, and we don't lower their risk profile when they retire.
Absolutely.
There's no one glove fits all.
Right.
There really isn't. I'll use an example of clients of mine, both retired teachers from Burnsville, and nice pensions. They deserve it. So they have nice pensions. They have Social Security. So their income needs are all met very successfully. So income is not a problem. They don't have a lot in retirement investments, decent amount. They're going to be just fine. Let's say $200,000 in retirement investments. They're 100% stocks. And you're listening and go, well, that's dangerous. Yeah, but guess who the beneficiaries are? Their grandkids. Their grandkids are, I think, 2 and 5 years old. Well, the timeline for the 2 and 5 year old is way out there. they're 100% in stocks. The clients don't need the money. Their income is good. So that's a different situation. So I say that because there's just no rule of thumb that, well, everybody that's 65 should be a 60-40 blend.
Right.
Not true. Now, we do see things a little conservatively because of the age group that we serve. That doesn't mean we want to become over conservative, but we want a good balance. And I can tell you that we see clients in their mid 70s, and their profile looks like a 30-year-old's profile should look. And sometimes the 30-year-old's profile looks like the 75-year-old profile. Again, not one glove fits all, but is anybody explaining that to you, or are you doing it yourself? Are you winging it? If that's the case, maybe it's time to get somebody's another second opinion.
Sure. Let me ask you this question. How can retirees balance generating income with maintaining growth in their investment portfolio?
Yeah, that's a great question.
Yeah.
And a lot of people like to look at dividend investing to provide income for them, or even just bonds for the interest that they provide. And we just like to keep it high level at the risk profile and just say, okay, what stocks do you want? What bonds do we want? And then from there, we will choose investments, and we're not necessarily chasing investments that are high dividends or high interest. And we're choosing what's safe with us, and what's comfortable for us. And then we're going to go in there, and whenever you need funds, if let's say you need $1,000 a month, we'll go in and rebalance the portfolio and generate $1,000 of cash from that to send out to you. And the reason we do it that way is because chasing dividends, historically isn't the best performance. And we want to make sure that we're diversified into just the broad market and not just limiting ourselves to dividend stocks, because that doesn't actually provide the best growth opportunity. If we can just go in there, rebalance the portfolio and not be just in dividends, we're going to be invested in the whole market, which historically provides a better outcome for us. And that way, we're not limiting ourselves to just one scope of the stock market.
This is one of those things that you guys talk about this all the time. This is why you don't just come in once a year, though, because this is a constant adjustment, maybe keeping an eye on what's happening based on what's happening in the economy and in the marketplace, correct?
Yeah, we get asked all the time, we just came aboard with you guys, Larry, and how often can we get together?
Yeah.
My answer is, how many times do you want to get together? Okay, some people want more attention. Some want once or twice a year. Others want more than that. But remember, at Haven, we do not just wealth management investments, but we do insurance and taxes and all the retirement stuff. So a lot of our clients could be meeting with several of us throughout the course of all the year.
Right.
What matters is, your investment plan is a foundation of your wealth and income strategy. And to ensure it serves you effectively, it's essential to adapt these general principles to your unique needs. Like I already said, it's not one glove fits all. So if you're looking at that and you say it sounds appealing, and I want to preface the conversation by saying, if you're listening and go, wow, I don't have that much, we don't have any minimums here. And you say, well, I get you guys are only speaking to the rich, wealthy people. That couldn't be further from the truth. I say whether you have very little or a lot, or anything in between, whether you're married, single, kids, no grandkids, whatever your situation is, your situation, and it should be talked about. So again, don't think this conversation, this is for you, and you shouldn't be embarrassed to talk about your conversation. And we just want you to know that, again, this isn't about how much you have, because it isn't really about how much. It's what are you doing to protect yourself, you, your spouse, a family? What is your plan? And if you really can't answer that, that would tell me you probably don't have a plan.
Right, right. So do you need a plan? Now in 2026 is the time to get one. 612-504-8400 is the number. That's how you reach the folks at Haven Financial Group. Call them and set up an appointment. It is free, no obligation. You just go in, you meet with the folks there to determine if you're a good fit for them and vice versa. Again, that number is 612-504-8400. Coming up next, keeping your emotions out of portfolio management. It's not easy, but it is wise advice. And we're going to talk about how the folks at Haven try to help people do just that. This is the Haven Financial Group Radio Show.